Assalamu alaikum. My name is Fatima Iqbal, and I'm a senior investment strategist and financial planner with Azad Asset Management. Thank you for including us in your conference on Awqaf. Today, we'd like to share with you our experiences in using family waqf, known as Waqf al-Ahli, as a tool for American Muslims wishing to leave a legacy with Islamic estate planning. Our use of Waqf al-Ahli is a result of years of scholarly research on the principles of waqf and then implementing these principles in a modern American trust document. First, I'd like to give you some background on who we are at Azad Asset Management. At Azad, we provide innovative financial solutions grounded in Islamic values. To give you some background on us, we are a boutique investment advisory and financial planning firm located outside Washington, D.C. We are registered with the SEC as an investment advisory firm and work primarily with affluent clients across the U.S. In addition to serving as independent financial advisors, we manage and sponsor 2 publicly traded mutual funds, as well as model portfolios for institutional and retail clients. Our dedicated team consists of chartered financial analysts and certified financial planners. We're different from many other advisory firms. One main reason is our dual mission philosophy. This mission focuses on generating competitive, long-term financial returns while using halal investment capital to promote a sustainable economy and positive societal impact. As such, all our products and investments comply with halal investment guidelines, as established by the International Accounting and Auditing Organization of Islamic Financial Institutions, otherwise known as IOFI. We're also a member of the Forum for Sustainable and Responsible Investment. At Azad Asset Management, we believe halal investing means avoiding the exploitation of human weaknesses and temptations. We do not invest in companies who have significant revenues from alcohol, tobacco, and gambling, and we also extend this to industries involved in or profiting from excessive debt and interest-based lending. We also evaluate companies for other guidelines such as environmental performance, human rights, labor relations, and anti-corruption. We know it's easy to label any product and call it something, but since the formation of Azad Asset Management, our goal has been to always provide genuine solutions, regardless of how challenging that might be. As a company, we believe these guidelines are important and valuable, so we created an investment process that sticks to these highest standards. When we create an investment portfolio, we first screen out companies that do not fit IOFI guidelines for investing. Since companies are dynamic and always changing, we monitor stock selections regularly to ensure they stay within these ethical parameters. We also have a purification calculator on our website for investors of the Azad funds. Using the calculator, they can calculate any unavoidable, insignificant amount of haram revenue that could not be screened out and disperse that to charity. Now that you have background on us, I want to give you some framework on where this need for Waqf al-Ahli arose in estate planning for our clients. Estate planning is simply this: what will happen to my worldly affairs after my death? Estate planning in America comes with a unique set of challenges. In the United States, we have federal transfer taxes, and some states also impose these taxes. This means that wealth above a certain threshold may have gift or estate tax consequences. Furthermore, the prevalence of joint ownership between husband and wife makes planning more complicated for American Muslim families wanting to follow Islamic guidelines for wealth transfer and inheritance. In the U.S., there are also intestacy laws which can dictate how wealth must be transferred if an individual did not do the appropriate planning before his or her death. And while boilerplate documents and cookie-cutter estate planning documents are easily available, most of them contain language contrary to Islamic law. And finally, many families are concerned about their family's financial future when the primary earner dies. How can they continue to support the needs of the family and ensure they are well cared for? Before we go into some of the tenets of waqf, I want to highlight why the need for waqf is important for many American Muslims. For one, we live in a secular society where the wishes of an individual can be honored, so long as they correctly plan for it. In America, if you do not do any estate planning or designate any beneficiaries, all your individual property will pass according to state intestacy laws. However, you can state your wishes by creating a last will and testament or revocable living trust. For a Muslim, the mawaris distribution, which determines the distribution of a Muslim's wealth upon death, can be included in these documents as the method of distribution. Additionally, a Muslim can utilize the concept of wasiyah, which is a Muslim's choice to give up to 1/3 of his wealth to any non-heirs, and state this also in his will or revocable trust. So in America, if you fail to plan, intestacy laws determine what happens to your money. Intestacy laws vary from state to state, but here you see a typical pattern of distribution with money going to a surviving spouse and children, and most likely not in shares as required by Islamic inheritance guidelines. The biggest issue with intestacy is the fact that your actual wishes are irrelevant. To avoid intestacy, a person can create a will or additionally a trust. A will is a legal document that tells the courts how your assets are to be distributed after you have died. And while there are advantages to having a will, there are also some problems from an Islamic standpoint. One of the main concerns is that a will can be contested. That means someone can make claims against the will after your death. And since there is no certainty whether a contest may be made and subsequently upheld, a will contest can jeopardize the inheritance distribution. This may also not be an efficient method if your estate is large and subject to estate taxes. And finally, joint ownership is a way that many couples own property. With joint ownership, both parties are 100% owners. Upon the death of one owner, the second owner retains 100% ownership. From an Islamic perspective, this is problematic since heirs of the first owner to die are essentially ignored. The utilization of waqf al-ahli is another way to ensure a spouse or other individual can benefit from the property for a time period, but heirs are not ignored. So all these issues related to estate planning create a dilemma for American Muslims. How can one adhere to the Islamic guidelines while still avoiding potential estate taxes, providing for one's family, and ensuring their wills and wishes will be followed? This project was inspired by a need to serve our clients who genuinely want to do what is right and also make sure their wealth and surviving family members are protected after their death. The concept of integrating conventional estate planning techniques with Islamic inheritance distribution was extremely challenging. While there are parties with expertise in areas, we cannot find any individuals, research, or projects that had suitable answer for how American Muslims could protect their wealth from taxation, utilizing conventional estate planning models without defying the Islamic rules of inheritance. The problem drove us to spend almost 2 years researching, reviewing, and implementing the rules of waqf into modern American estate planning. We were fortunate to work with Dr. Muhammad Adam Sheikh, a scholar with an honors degree in Sharia and law and doctorate degree in comparative jurisprudence. He served as a judge in the Sharia courts in Sudan and has also worked as a scholar, consultant, and imam in the U.S. for many decades. With his help, we embarked on a project to understand waqf al-ahli and how it could be used to solve the estate planning dilemmas we faced. This started with first understanding the rules of waqf and then implementing these into wills and trusts commonly used by estate planners. So what is a waqf? Here we find definitions from various sources. Sheikh Asawi stated, a waqf is to provide the benefit of your own property or its revenue to an eligible beneficiary for a period of time stated by the grantor. Also, a waqf is known as giving the benefit of a thing through its existence, while the ownership of the principal is retained by the grantor. Ibn Arabi of the Maliki school said the trust is an estate which has been reserved in a revocable or irrevocable manner for its continuous public or private usages and benefits, dedicated for the pleasure of God the Almighty. And the Moroccan official gazette stated that a waqf is any wealth that is being detained permanently or temporarily while dedicating its revenue or benefits to a charitable purpose. In practical terms, the waqf al-ahli becomes a specialized form of revocable living trust. The trust document serves as the kitab al-waqf, and here are some of the characteristics of the waqf. Revocability. The understanding of the validity of the revocable living trust is adopted by Imam Abu Hanifa, Imam Malik, and Imam Abu Yusuf. This notion of the validity of the revocable trust is adopted by countless Muslim jurists around the world and has also been recognized by Sharia Standard 33, issued and adopted by AOFI. Secondly, it preserves the intent of the grantor. The trust document or kitab al-waqf details exactly how the donor wants funds to benefit his or her beneficiary. The document also allows the waqf to benefit specific beneficiaries and causes. One important aspect of the document is to make sure that the assets remain Sharia compliant. Just as in one's life we make safeguards to make sure our earnings and income are halal, this trust provision ensures future investments, earnings, and growth follow these same principles. The grantor is also able to specify the contingencies for when the waqf should terminate and the assets should pass according to the Islamic inheritance schedule. The grantor can choose the termination based on a specific time period or contingent on certain factors. One aspect that is fundamental is that the intention must not be to delay or avoid the inheritance distribution, but rather to provide for a genuine need in supporting one's family. And another provision would include conditions for appointment and removal of future trustees. These trustees have certain powers granted in the document and act on behalf of the grantor. Here is a diagram showing how the document works. Integrating Waqf al-Ahli or specialized family trust can offer many estate benefits. Using the Waqf al-Ahli in an estate plan design can help minimize transfer taxes, provide for minor children, surviving spouses, elderly parents, and other beneficiaries, while allowing the grantor to maintain a degree of control after property is placed in the trust, even after one's death, and ensure heirs receive their rightful inheritance. As I mentioned earlier, inheritance can be fulfilled by using a will and revocable living trust. Ultimately, we were able to combine the features of a waqf with those of a revocable living trust and also the rules of inheritance into the Waqf al-Ahli design. This allows us to create a document that would act as a waqf in that it protects the wishes of the grantor. It includes all provisions to comply with Islamic guidelines, and it can provide for the continued need of a family. The waqf would also act as a financial extension upon the grantor's death. The waqf can also take on characteristics of a revocable living trust, which is typically used in America for estate planning. It is revocable, meaning the grantor retains the right to change the document and add or remove properties. The revocable trust also maintains greater privacy, avoids will contests, and can help minimize estate taxes. And finally, the mawarith and wasiya is integrated into the document so that upon the termination of the waqf, the obligations to one's heirs are not forgotten. The purpose of awqaf are to provide ongoing income, yet waqf assets also need to provide liquidity, diversification, and cost efficiency in order to provide the long-term goals of the grantor. Traditionally, hard assets have been used to fund waqf assets such as rental real estate. However, these types of investments have had a lot of issues that must be considered when trying to maintain a waqf. For example, there can be unknown long-term costs in managing property, as well as increased maintenance and dilapidation over time. This property has rental risk, is illiquid, and needs significant assets in order to properly diversify. Furthermore, in our modern societies, it can become difficult to manage when trust assets are located far from the future designated trustee. Utilizing financial portfolios can help minimize those concerns. A financial portfolio has known costs and fees. It can be managed according to the risk appetite and the financial needs the waqf will satisfy. It is also liquid and can be easily made available as the needs arise. Finally, a financial portfolio is more easily diversifiable and can be accessed anywhere with online technology. Using the Azad funds, which invest in Sharia-compliant holdings complying with AOFI guidelines, ensures that the waqf assets remain Sharia-compliant. They can also provide needed liquidity, diversification, and offer better efficiency when it comes to investment capital, cost, and management. Finally, the Azad funds provide professional asset management so that the waqf trustees can focus on the waqf beneficiary needs rather than managing assets. One of the Azad funds, the Azad Wise Capital Fund, is particularly important when managing waqf assets. This is the first halal fixed income fund available in America. The fund's primary objective is capital preservation and secondarily income. Our concentration in Sukuk and Islamic bank deposits give us the return we need for those shareholders without a lot of the ups and downs typical of erratic markets. Of course, this can also be important for investors looking for an asset mix with more diversification. The fund seeks to preserve capital and provide fixed income. Due to the lack of Islamic fixed income options in the U.S., we structured this fund for exposure to emerging markets. For anyone interested in this fund, as well as our equity fund, the Azad Ethical Fund, can visit our website at www.azadfunds.com. And that concludes today's presentation. Thank you for your time. Please visit our website, azadfunds.com, where you can download and read your free copy of the prospectus for the Azad funds. The prospectus contains more information about the fund's risks, expenses, and investment strategy. While there, you can also sign up for our monthly e-newsletter to get more information about our Islamic financial products and services. Finally, be sure to follow us on Twitter at Azad Funds and like our Facebook page, facebook.com/AzadFunds. You can also find more materials on our YouTube channel at youtube.com/AzadFunds. Thank you again for the opportunity to address you and share with you our work in reviving the Waqf in modern America. Assalamu alaikum.